Hey, Dennis Tubbergen here with another video market analysis. Today is February 21. Glad you're tuning in. Hey, today we want to look at the gold market. And I'm looking at the gold market today and analyzing it using an exchange traded fund with the investment objective of tracking the price of gold. Now, we think that many folks, when they're thinking about buying gold, should consider owning physical gold for reasons that we've outlined in past videos. However, this ETF does a really good job of tracking the price of gold in our view. Now, to analyze this market today, we're using a Japanese candlestick chart. And each bar on this chart represents 1 week of price action for GLD, or gold. The green bars represent the weeks that the market went up. The red bars represent the weeks that the market went down. Now, this chart goes all the way back to the financial crisis. In fact, if I were to make it go back even a little bit further, which I can do here by just changing the format of gold, this is going back 10 years. If I go back 20 years, I can also see that I have another trend line drawn here, which also shows that gold has been in an uptrend for that time frame. So let me go ahead and just pop that up. So a couple different uptrend lines here. We'll now get rid of this one and look at the longer term uptrend line. So this goes back about 13 years to mid-2005. We're now just into 2018. You can see that this uptrend in gold has not been broken. Now, obviously, we had extensions significantly away from the uptrend line, but when you look at a long-term trend, when you look at a long-term time frame, you see that gold has been in an uptrend. Now, this becomes even clearer when you change the format to monthly. Now we have a Japanese candlestick chart where every bar on the chart represents 1 month of price action. Whenever you look at a longer term time frame, you tend to get more perspective. So if you look going back to 2005 to 2018 here, now the uptrend becomes even more apparent. Now, this is really indicative as to what gold does in an economic winter season. Gold typically in an economic winter season performs extremely well. This has been no exception. Now, if we switch over and we look at a daily price chart, and now we're looking only at a daily price chart, really going back to really a couple years to early 2016. You see here that we've drawn an uptrend on the chart from late 2016 to the present. Gold is in a shorter term uptrend as well. Now, if you take a look at this line that I've drawn here, it's not quite a horizontal line. It angles just a little bit downward to the right. This chart, this line on this chart, I should say, might represent a very loose head and shoulders bottom. This being the left shoulder, this being the head, this being the right shoulder. So if we happen to see a breakout above this line on decent volume, we think we could see some significant uptrend on gold. The distance from this line to the bottom of the head here is about 20%. So we think that if we see this breakout here, we could see another 20% upside potentially in gold. We'd have to see a breakout. We'd have to see it on good volume. So there are some things that have to happen. But given that gold's currently in the 1350 range or so, that would see gold probably get up in the range of maybe 1600 or so, which we think would not be at all unlikely, particularly given that there is a lot more interest in gold worldwide, particularly since China has been accumulating gold for years. Russia's now talking about developing a cryptocurrency called the crypto ruble that would be redeemable for gold. We think that the fundamentals back up this technical analysis as well. So that's today's video market analysis. Thanks for watching.